All right, folks, let's just jump right into the Bitcoin dollar daily chart. As you can see that Bitcoin has been consolidating inside this descending channel pattern for quite some time. I could say like ever since it actually topped out in the March when it reached almost $74,000. Since then, we can see that the price is going down and testing this lower trend line, bouncing, actually nearing this upper trend line, sometime even testing it before pulling back again and retesting this lower trend line. So I think we are in this very deja vu uptrend and downtrend in the last few months. This is what we are seeing right now as well in August and September. On August, we saw this rejection here again after testing the upper trend line of the descending channel support resistance. And now we are just going down again, looking at this small time intervals near 55. But eventually, what I'm really thinking that in the days leading up to the September 19 Federal Reserve meeting, up until then, I think the market will be more jittery, more volatile, because those rate decisions are pretty evident. They are pretty influential, and they will actually drive the next course of Bitcoin trends. So up until then, I anticipate that the traders will be seeing a lot of jitteriness. Many of them will be like volatile. They'll be selling, buying constantly to make the best out of the jittery trades. But yeah, because we have been looking at the price completely capsuled here basically, so I would say that the next target we are looking at for Bitcoin is somewhere near this lower trend line. If I find the most amazing spot for you guys, I think it should be somewhere this February 2024 top. So you can say like it's maybe 52,000, or maybe if it forms like very long wicks, as it does anyway. Whenever the price goes toward the lower trend line of this channel, it actually forms lower wicks, suggesting there is a sort of bullish rejection going on. So we might say the same scenario here. We might reach 52 and the lower wicks can form towards $50,000. This is the worst, I would say, case scenario for Bitcoin in September, in the days leading up to the Federal Reserve, so that this target might be hit by September 19 for sure. So before even dwelling into the Bitcoin downside, I would like to actually spend a little time on the Federal Reserve interest rate decision. For that, I would like to take you to one of our articles we published. So as you can see, our author James has covered this amazing story. It says US jobless claims are rising. Labor market is cooling, but it's not crashing. Initial jobless claims averaged 236K since June, up from 213K earlier. It's actually below the pandemic levels as well, these numbers. So it simply means that the job market is not that tight as people are actually making it sound like. When there is a cooling market, yeah, they are rising, but it's a cooling market. It's not crashing. So it simply means that Federal Reserve can safely go ahead with a rate cut in September. And I'll show you another data from CME right here. So the CME data as of September 4, as of this time of recording, you can see that most of the bond traders, they are betting on a 500 to 525 basis point rate cut in September. The next meeting, as I had said, that it's going to happen between September 18 and 19, and by the end of 19, Federal Reserve Chairman Jerome Powell will give the guidance on this rate cuts. And in the last few sessions, I think Powell has already mentioned that they might go ahead with a rate cut. And rate cut, as you might know already, it's pretty bullish for riskier assets, specifically for those assets that are non-yielding, that do not create any interest rates for the investors, such as bonds. So when the interest rate goes down, the yield on such assets like US Treasuries, they also go down. So that reduces the opportunity cost of holding bonds, which is why we see a migration of some investors from the safer assets to riskier assets. And Bitcoin is actually one of the riskiest assets when I compare it to the traditional market sense, when you compare it to stocks. So that is also one of the reasons I believe that after, up until to September 18-19 Fed meeting, we might see Bitcoin in a very volatile manner. We can see some fluctuation. We might even see it falling towards $50,000, as I discussed in the previous section. But eventually people will find a bottom if Federal Reserve goes ahead with its rate cut interest plan. All right, let's jump to Ethereum, and compared to Bitcoin, this particular token, the second largest cryptocurrency by market cap, has been a very like it's an underperformer already. You can see it's already down about 43% from its local top in March. It's much higher than Bitcoin, and that can be blamed on the ETF outflows as well. Let me just walk you through it through this far side data. As you can see that we hardly had a day of inflow in the last, ever since they were launched in July. And the Grayscale Ethereum Trust is actually mainly responsible for this outflow. This particular trust has witnessed $2.6 billion worth of outflows, and we're talking about $524 million of outflows overall. So this Grayscale thing is single-handedly responsible for it. So yeah, one of the main reasons why Ethereum is feeling this pressure is because of ETFs for sure. But I'll just come back and guide you through where we are looking at the price. As of late, as of September, in the last few weeks, we are looking at Ethereum fluctuating between this sideways trend, helped by this upper trend line and this lower trend line. So any attempt to cross above this upper trend line is meeting with rejection. Hence, the price is falling, and now we are coming back to test the support trend line. This is actually the fifth retest since August 4, and in the past 4 months we have looked at price rebounding. So I'm anticipating a similar reaction from Ethereum bulls particularly, and should it happen, we are looking at a rally toward 2,775, approximately $2,800, let's say it like that. So it's like 17.5 to 18% above. This is also coinciding with, as you can see, the 50-day exponential moving average line here. So we have two resistance targets right now for Ethereum bulls. So this is the setup I'm looking at. But at the same time, I want to show you something interesting, because if this bounce takes place, then we're gonna have a situation called double bottom. So why am I saying double bottom? Because a double bottom is a technical pattern that is characterized when the price first falls down, forms a local bottom, rises again, but then falls again to fall alongside the previous bottom and forms a second bottom. So when you have these two bottoms, it is considered a bullish reversal pattern overall. And as a rule of technical analysis, how do we really measure the upside target of a double bottom pattern? Let me show you that as well. We're gonna just take an arrow here. We're gonna measure the maximum height between the upper and the top, the bottom and the top of this pattern, and then we're gonna add it to the potential breakout point, which I believe should be this resistance level. So this particular, like I said, this rebound can take the price to 2,800-ish level, and once it happens, the bulls will try to really break above this level. So you have to wait for the trading volumes to pop by, and if you see any attempt to break above this 2,800 pattern, then there's a huge possibility with higher volumes that the price will rise further and it will reach to, let me see, 3,300 level. So this is the upside we are looking at. That is about 38 to 40% above the current prices. So this is what we are looking at, and for the next days, I think it's pretty bullish for Ethereum if this particular rebound plays out as intended. You have heard so much about Bitcoin and Ethereum, but you are still wondering where to actually trade them. So if you want to trade them, I would suggest you Exness. It is the world's leading retail broker, offers ultra fast execution, no oversight fees, and advanced tools. Trade crypto through CFDs, capturing price movements without owning the coins actually. With 24/7 support, your trading experience is secure and seamless. Click the link below to start trading with Exness today. Alright, let's take our focus on XRP. Unfortunately, XRP has not been a very good token this year. It's actually one of the few tokens that are down on the year-to-date basis. It's totally underperforming the broader crypto market. And its recent price actions has been jittery. We are looking at massive scale uptrends, but an equal proportion of downtrends and uptrends. So it's pretty volatile, and one of the main reasons behind this pump and dump scenarios is the uncertainty surrounding the SEC versus Ripple case. So far, SEC has lost the case in a way, because they were asking for about 2 billion in penalties from Ripple, and the judge, Annalise Sator, is the district judge in the New York state. She ordered SEC to pay only 125 million in fines. So that's a huge drop versus what SEC was anticipating from Ripple. So that is considered quite a win, which is why we saw this huge pump. But ever since that pump, there has been some uncertainty about SEC appealing the case. And we also have covered that in FXEmpire. Mr. Bob Mason, they covered it for us just a few hours ago, that Ripple's core ruling faces uncertainty as SEC appeal speculation continues. I'm just going to jump here. The SEC has remained silent. The final judgment on August 7 and 60 days from final judgment to an appeal. So basically they have 60 days for now to appeal the case. So up until then, traders are quite confused about the SEC's response. If they appeal the case, it means that the SEC versus Ripple lawsuit will drag on maybe for a few months. We're going to see the retrials and everything, and that has not been good for XRP so far. This uncertainty is one of the main reasons why XRP has underperformed the broader crypto market. So a lot of it depends on how the Security and Exchange Commission reacts to this outcome of the Ripple case. We'll see to it. There'll be enough to see. But until then, let's go back to the technical analysis and show you what's happening. We are back into this consolidation range, a lot of extreme upside and downside movements. And now we are checking this lower trend line support. This trend line support is actually confluencing with another support trend line. This is horizontal one. As you can see that this particular level has been active. It was capping the downside attempts in March 2024. We also saw it supporting the XRP prices in February. There was some support in January 2024. So this trend line near 0.546, it has been pretty active as a support. So I'm hoping that it might play out as intended in confluence with this ascending trend line support as well. And in September, specifically toward the federal rate cut announcement, if it ever comes, we are looking at the XRP price actually jumping toward this upper trend line. This descending trend line resistance has been active a lot since March anyway. We have seen multiple attempts of price to break above it, but all of these attempts, futile attempts, have been capped. So I'm just saying that, because we don't have any clarity on the SEC versus Ripple case, so I think traders will be more or less trading within the safe range where they can make profit from their long and short position. So what I'm really thinking is a rebound toward the upper level. And where does this land us? Let's see. Maybe some wicks here, but yeah, this has to be the ideal target, I think, 0.60. Right now we are trading at 0.55. So yeah, a $0.5 rise is what we are looking at in the XRP market in September. So that's all, lads. That was the video for you. I hope you liked it, and if you did, please do not forget to like, share and subscribe it.